All right. Thank you, everyone, for joining us today. This is our ongoing rental expert series that we do in conjunction with NAR. And today's webinar is Turning Renters into Buyers. My name is Josh Taylor. I'm the Vice President at Rentals Beast. And I'm joined by Mackenzie Bigelow, who works at Leader Bank. For those of you who may not know, Leader Bank is one of the larger residential lenders in the United States, and we're delighted to have Mackenzie join us. She's got over a decade of experience in the world of mortgage, and for many years she was a branch manager, which loosely translated means she's seen everything, um, including all the special things that got elevated to her in that role. So we're delighted to have her join. In terms of the agenda for today, I'll talk a bit about the rental market and how it relates to the purchase market, going through some of the characteristics of these renters and some of the problems that they face, particularly from an agent perspective, and how you might be able to utilize that in your business. And then Mackenzie's going to take us through the financing side of all of this, again, particularly in relation to first-time buyers. And she's also going to help us think through how real estate agents can effectively collaborate with loan officers to help clients, particularly first-time buyers, achieve homeownership. All right, so with that, let me kind of start at a very high level. How do renters tie into the for sale market? Well, first of all, renters and rentals are a very significant part of the US housing market. Somewhere around 35% of housing in the US is renters. And as you get into suburban and urban markets, that goes up to 50, 60% in some places. So for real estate agents out there, if your business is helping someone find a home, the rental market is absolutely something you want to be knowledgeable about and have as a tool in your toolkit. When we talk specifically how renters and rentals tie into the for sale market, our friends at NAR tell us somewhere around 70% of all first time buyers come from rentals. So you should think of this as a massive and critical pipeline into the for sale market. And that massive pipeline continues to expand. When you're talking about tens of millions of people, of course, you're going to have all types within that basket. And it's certainly true of renters. You have a number of people who may never buy, but you also have huge numbers of people who are ready to buy or will be ready to buy soon. And it's an expanding group. So our friends over at Harvard Joint Housing tell us that a third of all renters are high income, what they think of as 75,000 or more in income per year, which is, again, a significant number of people. You also can see, and you can see it in numerous studies. We pulled this one from Zillow from 2025, that the desire among renters to purchase is there. You can look at any of these stats on the right-hand column and get a sense of that. 64% of recent renters considered buying, 25% seriously considered buying. I think all of these things are interesting, and they reinforce the idea that there is a huge cohort of renters that are financially able to buy and that would like to buy, right? And your job as a real estate agent is to meet your clients where they are. You'll have a lot of renters who will go into rentals, but you'll also have a lot of renters that if you can help them understand how close they are to purchase, they may become a buyer. The one thing that I really like on this slide and I wanted to call your attention to from the Zillow survey is 42% of renters are likely or very likely to buy if rates drop. So I want you to kind of tuck that one away in your memory, and we'll talk about that one again in a few slides. But again, the point of this is a huge number of renters in the US. A lot of them financially are in a position or very close to being in a position where they can buy. And the desire to buy is there. Nothing has changed there. So if I'm an agent, how am I thinking about this strategically? Well, what do I know? I know that we have a lot of renters in the US, and I know that um, a lot of them will become buyers. I just need to think about it again from a more strategic level, right? Like the timeline here is probably a year from now or 2 years from now. So if I'm thinking about my business and I'm planning for the future, how can I tie in this massive pipeline of first time buyers, right? So the idea is the same. It's just you're thinking on a slightly different time horizon. I also, as an agent, know, and we all see the same stats, that if I work with a client and I'm able to establish a relationship and they see me as credible and trustworthy, they will think about me anytime they think about real estate. So if I'm able to tap into this renter cohort, think of it as being upstream in the overall kind of housing process, and I'm able to establish a relationship, I'm creating a client for life, right? A first time buyer, and again, as they buy and sell in the future. So strategically, that's how we would recommend thinking about renters as it relates to buyers. Now, that's great to think about that and to kind of understand it, but like, how do we actually affect this? And part of this is, of course, knowing our clients. And you have the great benefit of being able to actually communicate and interact with someone at a personal level. There are companies out there like ours and others that spend an enormous amount of money trying to figure out who someone is, right? Millions of dollars and data analysts trying to figure out, is this person a likely buyer or not? And what I always tell agents is, you're in the unique position of just being able to ask, right? Are you thinking about buying? What are the things that make you hesitate? And I would strongly encourage, as you're working with renters, they may be buyers. It may be 3 months from now or 3 years from now, but they may be buyers. It's your chance to understand your client and maybe understand the hesitation. Are they part of the group that's just looking for rates to move, for example? So it's critical that you're positioned correctly. And part of that is understanding. And then part of that is understanding that small changes, either at the personal or household level, could impact this. So, for example, if someone gets a new job, for example, if someone changes their household makeup, they get married, for example, or have a child, these are all events that could precipitate a purchase. So, you as the agent knowing this, as the agent being in touch with the client when these events unfold, it puts you in a position to succeed. There's also a lot of external factors that come into play as well, right? There's a lot of talk right now at the federal government level about programs that may help first-time buyers. As these programs come into reality, this is a great time to reach out to your client and just say, hey, as an FYI, this is something you may be interested in. So there's a lot of opportunities, if you're positioned correctly, to interact with your clients who are renters that may be shifting into buyers. The other key to all this is education. And again, if you don't think of renters as future buyers and you're just thinking about real estate agents as helping someone find a home, you still want to know about the rental market. Again, it's a third to half of the overall housing market. So how can we use positioning and education to help nudge our clients towards becoming first-time buyers? I thought this was a very interesting example. So Rental Beast, in conjunction and collaboration with NAR, puts out a quarterly market report. And one of the things we look at is the spread between the monthly rent payment and the monthly mortgage payment. And what we have seen over time is these are starting to compress, meaning it's in some areas cost about the same. This is after the down payment and all that stuff. It's on a month-to-month basis, in some areas is costing approximately the same to rent as to buy, right? We've seen year over year this kind of tightened by about 30%. And if you look at, for example, the Miami line, we would expect a typical monthly housing cost on the for sale side to be around $3,000, $3,100. On the rental side, we would expect it to be about the same. If I am your client and I'm going to be in Miami for a while, this is an interesting conversation to me. So if you understand me as a client, if you're well positioned and you're starting to bring this information about true costs, this is where you are going to be very effective in helping convert your renter clients into buyer clients. All right. Again, education, there's a lot of stuff not necessarily in your control as an agent, but you definitely want to remove the blocker of having clients who are not correctly informed or just uninformed. It's well reported that a lot of renters believe that they need 20% down, and McKinsey can address this. That's just not the case. There's a lot of people that feel like their credit is not good enough. And again, there's a program out there for everyone on the purchase side, and there are also ways to change your credit in pretty short periods of time, right? So informing your clients, helping them understand the market and what they could do, I think as a real estate agent is only going to help you kind of nurture these renters into buyers. Again, a common theme of education. Let's make sure that education is not the hurdle for a renter becoming a buyer. A lot of clients believe the mortgage process is too difficult. A lot of folks just cite a lot of things that don't necessarily have to do with the cost or inventory or anything like this. It's just the process itself. I can't buy, it's too hard. Anything you can do to help kind of mitigate these factors, I think is going to be very helpful to you as an agent. And the same thing, right? Some of these financial challenges, again, it comes back to my debt to income is not appropriate. I have to put too much down for a down payment. And a lot of times people misunderstand what they actually need. So again, you as the agent, if you understand your client, if you are putting yourself in the position to connect with this client and keep them informed, and if you have the correct knowledge and education that you can provide to them, you're certainly helping yourself nurture these renters into buyers. Great. All of that is very helpful, but let me shift to McKinsey and she can give us some ideas of some specific strategies and tactics that may be able to help us from the financing side of all of this.
All right. Thank you, Josh. My name is Mackenzie. As he mentioned, I work for a company called Leader Bank. We are based out of Massachusetts. We are the number one purchase lender in Massachusetts, but we do loans all over the country. So have seen it all. Something else that is mentioned here is that 84 Net Promoter Score, which some of you might not be familiar with. That is a score that's based on reviews in the market, and that score is above the industry average, and it's a very good reflection on Leader Bank and what we do. So I figured I would just start, and first of all, this is a great topic. Absolutely, so many renters out there that don't know that they're in a position to buy for various reasons. So let's dig in and just kind of start with some basic things as we go through this conversation. So the first one there listed is conventional loans, and I've listed that there because most of what we discussed today is going to pertain to conventional loans versus a jumbo loan. And what that has to do with is the size of the loan. In most areas, that's going to be a loan amount of 832,000 roughly or less, which as a first-time home buyer, most people are going to fall into that category. So with a conventional loan, back to that down payment topic, first-time home buyers can buy a home with as little as 3% down of that loan amount, which, is a big misconception and kind of goes into private mortgage insurance. It's kind of embedded in people's brains that they have to have this magic 20% number to buy a home, and that's just not true. And the 20% gets you to where you are not paying what's called private mortgage insurance. So people just think 20%, that's it. Private mortgage insurance, obviously it's a payment on top of the principal and interest, but it's generally not as expensive as I think people tend to believe these days. You know, when you go on Zillow, and we all know Zillow numbers are always spot on, sometimes it will break down potentially what a payment could look like. And, sometimes on these sites it gives PMI numbers and those don't always tend to be accurate. So, it's something that is worth, actually having a lender calculate and go over with you. Other types of loan options, we've got conventional loans, we have FHA loans and VA loans. FHA loans are again a great option for people with, 3.5% down, and it's got very flexible credit guidelines. We can dig into that. It's a good option for people that are maybe have had some issues with their credit, working on it. An FHA loan might be right for them. VA loans, if somebody qualifies, are great rates. They can do a VA loan with 0% down, actually. And, I will also just throw on if, any of you are, thinking you're not very experienced with VA loans, don't be intimidated by VA loans. They are very similar to any other loan you've done with a client. And I talk to listing agents sometimes who will look at a pre-approval and see that it's a VA loan and they get excited. They say, wow, a VA loan. I love helping our veterans. This is great. So just wanted to throw that out there.
And Mackenzie, I'm sorry to interrupt you. Just a housekeeping tip for our audience. If you have questions, please feel free to put them in the question submission area, and we'll certainly try to get to as many as we can at the end of the call. Sorry to interrupt, Mackenzie.
No problem. Okay, so now to get into some different things that kind of pair with the different kinds of loans that could be available to first-time buyers. These are things that, you as agents don't necessarily need to be the expert and know all of the ins and outs and is this going to work for them? Is it not? It's more so just to know that these things are available, and they're tools that we as lenders are very familiar with and, will know if they apply to borrowers one way or the other. So the first is down payment assistance programs. These programs are available in every state. They are going to vary a little bit. You would just maybe, poke on the state's housing authority website. They're generally going to be like $15,000 to $25,000 that can be used towards down payment and closing costs. Um, it is not free money, typically. I have borrowers all the time. Down payment assistance, we want that. And it may or may not be the best option for each client, but it's good to know that it's available. They usually have income restrictions, sometimes asset caps, to qualify for the assistance. Um, but generally speaking, if some people does not have a lot of money saved for a down payment, this potentially could get them into a property, which is the goal. Co-borrowers. We can add a co-borrower to a loan application. What does this do? This increases the income of the person trying to buy because now we have an additional person's income that we can look at. So, in an instance of somebody young that's maybe starting out and their salary is growing, but not quite there yet for the market. Maybe they have a parent or a family member that can, be a co-borrower for them on the loan. Gift funds. This is something that I feel we see pretty regularly these days, actually. Um, it's where a family member can gift somebody money to be used towards, their down payment to purchase a home. The process for this is easy. It just comes down to sourcing the funds. We see the money go in and we get what's called a gift letter from the family member that provided the gift funds. Sometimes, borrowers don't know that this is an option and come to find out they have some family member that's willing to help out. Grants. So grants are going to be different than the down payment assistance programs because they are non-repayable. These generally come through different programs, nonprofits, community groups, maybe through like the town or the municipality. They do have to be applied, to get the grant. There's going to be similar restrictions that are going to apply, location, income, things like that. They're not going to be guaranteed, even if you meet the criteria, because sometimes the funds are limited. But, it is always worth it to mention, to a potential client that it might be something they want to look into. And then lastly, just your general local and state programs with, home buyer incentives. And these usually come with discounted interest rates, particularly for the first-time home buyer.
Mackenzie, quick one for you. If I'm a real estate agent and I refer my client or my client goes to a loan officer, do I need to specifically request the loan officer kind of evaluate these different programs, or is it just kind of the normal course of business for the loan officer to look into all these potential options for a client?
It's our normal course of business to look for any potential, benefit or, different scenarios. Because like I said, the down payment assistance, for example, everybody says, "Oh, sounds great. Give me down payment assistance." And we look at that, but we also pair it and look at, just like a standard conventional first-time home buyer program, and one may end up being better than the other. But yeah, we look at all of these. I think it's just great to be familiar that they're out there, that they exist, so that if you get the question, I don't have down payment saved. Oh, well, maybe you should look into down payment assistance. That could be an option for you.
That's
Um,
amazing. And
yep.
and is it what stage of the process would a loan officer typically start to look and research some of these options?
The very beginning.
Okay, great.
Yep, because at that point we're looking at income and, potentially what's going to be a good fit for them and all of those things.
I got it. And for the agents out there, your interests with the loan offices are fairly mutually aligned, right? You both want to help someone get into a house. So that's great to hear.
So just some basic signs that, would make a renter potentially a good candidate to qualify to buy. Obviously, credit score is going to be a factor. For those of you that may not be aware, 780 plus is actually considered the best credit when applying for a mortgage these days. So the next question is, well, what's the lowest? And that can vary. For example, our bank, we have 620 is our minimum. But there's other places out there, particularly paying with like an FHA loan, that people with below a 620 would still be able to buy. Um, Having a manageable debt to income ratio is going to factor in. On a conventional loan, we want to see this in the 40s. So again, these are all things we're looking at the beginning stages, where we're at, do we need to improve this? How can we improve this? And then obviously income factors into that. We're looking for a history of income. Is it stable? Is it going to continue into the future? And then as well as, having cash to close up front. Um, Again, all part of the early stages of what we're looking at because somebody, can apply for a loan and say, all right, I'm putting $50,000 down. I have exactly $52,000 in the bank. Well, that is going to cover the down payment, but that's not going to cover the closing costs. And then in addition to that, you have your escrows and your prepaids, which a lot, particularly first-time home buyers, are not aware of, that they have to pay a year worth of insurance at closing. They have to pay a certain amount of taxes at closing, and those figures can add up. So, working with a good lender is going to go through all of these things, determine if a pre-approval is necessary and take it a step further and give them a full quote of, potential payment options and what that cash to close figure is going to look at. So a borrower is truly ready, to qualify to buy.
Mackenzie, do you have any rules of thumb in terms of how much steady income you would like to see? And then same question, some sort of rule of thumb on the cash to close?
Yeah, so you can very easily calculate your own debt to income ratio if you wanted to. It's just you go on Google and, debt to income calculator for a mortgage. It's going to ask you for your annual income and then it's going to ask you to add up, any monthly obligations, car payments, student loans, things like that. And you can plug that in and, kind of see where you're at as a gauge.
Gotcha.
But much easier just to reach out to a lender and have us do it for you. So, Josh kind of talked on this earlier, but just some signs that, maybe a renter is ready to take the next step. I think these can be very vague or they can be very specific. It can be as much as just inquiring about how the housing market is or how are interest rates these days. Um, let's have you talk to a lender with that question. Or they can be more specific. Maybe somebody is looking for specific school districts. Their family is expanding. They have specific needs as far as commuting to a job. Or, lastly, their lease is coming up. They're going to have to make a decision. They're either going to renew that lease or maybe they're in the market to buy and don't even know it. A conversation could be worthwhile at that point.
Yeah, absolutely. And I would reiterate to all the agents on the line, right? You have this relationship, and there are all these little events that are happening that you can use to reach out to your clients. It could be, again, a family change. It could be, as Mackenzie is saying, the lease is coming up, right? They have to make a decision. It could be something that's going on in the broader environment. The rates just went down. So these are all potentially very interesting ways that you can engage your client on this exact conversation.
So let's say you get some sort of signal that maybe this person could move from a renter to a buyer. And you toss the idea out to them and say, maybe you should talk to a loan officer. There's going to be, objections that may come up. They may say, nope, rates are too high. That's the obvious one right now. Are rates too high? I find it depends who you ask. Um, sometimes I'll work with a client who's retired and I'll price out and say, okay, this is the rate we can offer. And then I hold my breath. And they say, oh, that's not bad at all. I bought my first house in the 80s and my rate was 16% or something. So it's all about perspective. But the reality is, when we're talking about first-time home buyers, we will probably have more of the people that only remember 2020 and, all these people that they know that locked into 2-3% mortgages. What I would say to that is I would say that, you don't know unless you look at the actual numbers. The rent versus owning, which we saw in the few slides before. Because when you break it down, and let's say at a 6% mortgage, somebody is able to be comfortable with that payment to buy something now, they have a property. Because my personal opinion is that you have all these people that are waiting on the sidelines that have this magic number in their mind, 5%, maybe 5.5%. And once rates hit that magic number, they're going to come in. And they've been sitting back and renting and saving money all this time. So they're going to jump in and they're going to be aggressively wanting to buy. And so we're going to have competition, multiple offers on the table, prices going over the asking price, bidding wars, all of that, all of those things. So that's why I would say, that's how I would argue that objection of rates that are too high. That being said, you can always refinance down the road. Maybe rates do go down to that magic number of 5%. You can refinance. If they go down enough, you can do a no-cost refinance where you pay nothing at close and you're saving money every month at a lower interest rate.
That's an interesting perspective that you're getting the house you want at a price you can afford. And you have the optionality, if that magic number does happen, that you could refinance and you're avoiding the risk of losing out on a place you like.
The risk of losing out, the risk of, paying more on that property.
Sure. Interesting.
the time of building equity. The other objection we've touched on is the down payment issue, which really isn't, it shouldn't be an issue because there is so many options out there for 3% to 5% down. It's just a matter of, again, looking, seeing what that would look like. Maybe they're still not quite there yet with the down payment. We can then look at how to get them there, paying off maybe some debt that they have so that they can save more money towards that down payment. The suggestions of, gift funds and all of that stuff. Uh, the bottom bullet, maybe they don't even have as much debt as they think they do. If there's loans out there that have 10 payments or less, we don't even have to use those to qualify them for a loan. Student loans, because I know that that will come up. Student loans do factor into debt. Even if they are deferred, typically we still have to count with a half to a 1% of the loan amount payment. And lastly, people, are worried about their employment, particularly if they're not a W-2 employee, which is fine. We work with self-employed people, 1099 borrowers all the time. It's just, it generally, we need to see some history there. 2 years is usually ideal of what we're looking for. It's going to involve getting tax returns to go through those because very often what people may think that they make might not carry over exactly to what's shown on the tax returns. Which also kind of brings me to something worth mentioning as I'm going to be discussing in the next few slides as you build a relationship, with a loan officer, which I recommend. Asking for those documents up front, I think is important. None of us want to waste our time. So, if you're recommending a client, a potential client to, hey, you should talk to this loan officer, they should be asking for some documents up front to make sure that everything is accurate and correct and the pre-approval is solid. So that way, when that person is out and you're showing them properties, there's no concern that once that offer gets accepted, something is going to go awry and maybe those pre-approval numbers weren't, exactly what they should have been. So how lenders make your job easier. The slide on the right, you have no need to be the financial expert. Let us do that. We know the programs, we know the numbers. You just need to know the signs. Those little signs that somebody might be a buyer, a potential client for you in the future. And then you're able to be this source. Hey, let me connect you to so and so. It's worth having a discussion. As loan officers, we love those conversations. Getting the phone call from the first time home buyers that are like, we don't know what we're doing, we're so confused, we're scared. And at the end of the conversation, maybe now is the right time and now they know the next steps to move forward. Even if it's not, they've gained a little bit of education on what they need to do. So it's a win-win for everyone. Nothing is a waste of time. A couple weeks ago, I had a buyer contact me, young, made about $30,000 a year and wanted to buy a three-family, 900,000 multifamily property. I couldn't necessarily qualify them as is, but I left that conversation just thinking, wow, that person has got some ambition and I love it. Maybe we'll do business down the road.
Let me also on this slide just bring up another thing for the agents out there. It's something I've talked to a number of agents about, and it goes something like this. Your first time buyers don't go from no interest in buying to I'm a buyer, right? There is a process that happens there. they're progressing along a path, and you play an important part in that. But one of the ways that you can help them progress along this path more efficiently is you can introduce the loan officer in. Think of the loan officer as they're collaborating with you, but they're also one of your selling tools, right? You're taking a renter and you're doing something that is not really selling at all. You're just saying, hey, you should talk to this loan officer that's great, right? You're not selling them anything. You're providing them with a professional expertise. It doesn't cost them anything. Mackenzie,
Mhm.
I'm assuming you don't charge people when they,
No,
right? So
no.
you as an agent have a loan officer who's critical to the process, but is also could be a very powerful sales tool for you to help your renters progress into buyers. Talk to my loan officer. At that point, the renter can understand where they sit. They can actually now start to like understand what they may be able to afford, and then start to like see houses to touch and feel that. This is a really important and I think a very sophisticated way to help nudge your clients along the path to being a first time buyer. So I've heard agents use this very effectively. The first time I heard it, I thought it was brilliant, and it's certainly something I wanted to pass along to all of you. All right.
And, if you don't have, that relationship with, it doesn't have to be one particular loan officer that you only work with this person. I would just recommend developing, a relationship. Maybe you've done a few deals with, somebody here and there, they went smoothly. Reach out, ask if they want to grab a coffee to see if maybe you can take that relationship to the next level. Because if you are going to be, saying to potential clients, hey, talk to so and so, you want to make sure that's going to be a good fit. What is the responsiveness level of that, loan officer going to be? Make sure everything's in line, and it truly should be a partnership, because we all have the same goals at the end of the day. So, like I said, if you don't really have, some sort of relationship with maybe go-to loan officers, I would certainly recommend it.
And Mackenzie, we have a lot of newer agents on the call that likely don't have these relationships. From your perspective, is that how it works? You get a call from a real estate agent and they're like, hey, I'd love to just kind of grab a coffee and like pick your brain. Like how does this normally sort of progress from your perspective? And what makes a good kind of relationship?
Yeah, I mean, it can go both ways. I mean, obviously, us as loan officers, your clients ultimately, they listen to you. And if you say hey, they trust you, and if you say, "Hey, I think you should talk to so and so," they most likely will. They're not obligated to do a loan with us. At the end of the day, some people are going to go wherever the best rate is, and that's the business. Um, but, so it can go both ways. There's us as loan officers, sometimes we reach out to agents and try to develop those relationships. But as a newer agent, and, like I said, maybe you do a deal and it goes really smoothly and it seems like, all right, this loan officer knows their stuff. Yeah, don't be afraid to reach out. So, same topic. When should you introduce someone to a lender? Right away. I'd say, because there's no harm. The worst thing that is going to come out of any conversation is just a little education and maybe a plan for the future. And that's still going to be a good thing for people looking to go from renting to buying.
Awesome. Well, good. Well, thank you. I've got a couple slides to wrap up, and then we have a ton of questions. So, Mackenzie, I think you really hit a chord with our audience here. So before we get into the question and answer session, I did want to just mention something that Rental Beast is going live with. It's actually being piloted in Miami right now. We have about 100 agents or so that are using it, and it's essentially this. I'm sure you're saying to yourself, "Hey, Josh, this is great. Renters turn into buyers, and I should take advantage of that." But it's not easy. We agree. So we're introducing a platform. Again, it's being piloted right now. Think of it as your easy button. The idea is you can invite your renter clients into this platform that's called Renter Lift. Rental Beast will help you with the nurture, and we will let you know when they appear that they are ready to buy. So we're trying to do all the nurture and incubation for you. Um, it's something like this. You send us renter leads, the Renter Lift platform helps those renters transition into first time buyers, and we keep you informed along the way. It's just software to make your job a little easier when you're trying to nurture renters into buyers. Importantly, we keep you informed as your renters are taking actions. So if they begin searching for homes, they're checking out education, they're requesting pre-qualifications or pre-approvals, we keep the agent informed. It's really just an extension of your RentalBeast platform. So your client stays your client. We're not selling this or sending this to other agents. It's a platform for you to nurture your clients. And it's free to real estate agents, right? So we're piloting this right now. And my guess is probably in the next month, we'll just start to release it out across the country. And again, if you're using RentalBeast, if your MLS is a RentalBeast subscriber, you will have access to this for free. So stay tuned. Just kind of wrapping up, just a quick headline overview of what we've just talked about. Point one, renters are a major part of the housing market, up to 50–60% of the housing population in some areas. And more relevant for this conversation, they are the largest supply of first-time buyers. So somewhere around 70% of first-time buyers are coming from rentals. If you, as an agent, can engage this pipeline, get access to this cohort upstream, stay in touch with them, provide them with the right education because you're positioned correctly, you're doing yourself and your future business a huge service. One of the critical components of all this is making sure that you have a basic understanding of the financing and that you are using a loan officer to help you kind of incubate and nurture this into a first-time buyer. So hopefully what we went over was very helpful for you today. And now we're going to shift into some Q&A. Mackenzie, are you able to, or I'll just read them out. How about that? So just quickly, if you're interested in RenterLift, we do have a wait list. Again, we're going to start rolling it out nationally over the next couple of months. But if you want to make sure you are one of the first users in your location, please feel free. Again, it's free to you. Your clients remain your clients. All right, so let's jump into some of the Q&A. Let's see. First of all, this will be recorded or has been recorded, and it will be made available to everyone after the fact. All right, let's see. Mackenzie, could you talk quickly about a pre-approval versus a pre-qualification?
Yeah, so a pre-approval is, a letter that means somebody has connected with a lender, completed, an application showing all of their financial details. Credit pull is usually involved, and a loan officer, such as myself, has gone through it, and I get basic documents. Again, just because I have seen people put things on applicate, they don't know how we calculate bonus income and those things. So I think it's important to look at pay stubs and things like that. And we determine, yes, if you were to purchase a house for this amount, you should have no problem getting the loan. Makes the seller feel good. Um, Whereas, what different banks have different names, but a pre-qualification kind of takes that a step further, where, documents are given and sometimes an underwriter actually goes through everything. Leader Bank, we offer a program like that where at that point you're kind of have a fully underwritten approval, which that's the difference between the two.
Okay, great. Thank you. In terms of clients that need credit coaching, what do you typically recommend the agent? What are the resources the agent should be aware of in that case?
I mean, credit credit is complicated. Oftentimes I can go through and I can identify, the certain factors that are, dragging it down and the obvious things that, that can be done to improve it. There's also tools, that people can utilize through, like a Capital One card. There's tools where they can plug in, and those work. I've used them myself. You can plug in, all right, if I do this, how will this affect my score? I think it's just doing the research and using the, tools that are available to us.
Would it be a fair expectation of an agent, if they're working with a loan officer, that the loan officer, after seeing the particular candidate, may have some suggestions about
Yeah. Oh, absolutely.
okay,
Yep.
awesome. Next one is from James. If a client wants to compare lending options while limiting the negative impact of multiple credit inquiries from the lenders, is there a time frame in which they should complete their pre-approval requests from the lenders? So if I'm shopping around, right?
Yeah. So, people can shop around. I see a lot of first-time home buyers get really hung up with shopping around in the beginning when, ultimately rates are going to change. We don't know when they're going to find a property and rates could be completely different. So yeah, I mean, I think you can reach out, have some conversations with a couple lenders, if you wanted to get a couple different pre-approvals and get all that done without a week, within a week, you're in a good spot. There's not going to be any major impact at that point. Um, and then once you get an accepted offer, that's when you can really, really shop around and get some solid, rate quotes.
The next one is this is about the down payment assistance. Um, who do we connect with regarding the home options and requirements? The loan officer or the program counselor?
You're gonna go through the loan officer, because ultimately all of that is gonna go through the loan application itself, and they're gonna handle it. Like I said, just for like general knowledge, it doesn't hurt if, you went to here, it's, the Massachusetts Housing Authority. Each state, it's gonna be called something a little different. But if you did just for general knowledge, want to read up on the programs to, have a grasp on what they look like, the criteria that kind of thing. That never hurts, but the loan officer will handle all of that.
Okay. The next one, I take this to mean someone who owns a rental property. How is rental income calculated in the income piece?
It's generally we take it off the tax returns. There's a Schedule E if it's, they own the property for more than a year. If it's a newer property, we're going to need to see a lease agreement, maybe like first month's rent. And from there, we use 75% of the monthly rental income. We also can use rental income if somebody is purchasing an investment property and there's rental income there. We can use that to qualify as well.
Okay, awesome. The next one, I hope you know what this means. I'm not sure what this is. Um, can you speak to the new disregard of credit by feds and what that looks like for lenders with their overlays?
Disregard of credit. I'm,
Okay,
yeah.
all right. Whoever wrote that in, if they want to put in some clarifying remarks, we'll certainly try to get back to that question. Next one is if someone is lower than a 640 credit, wouldn't their rate be very high?
Yes and no. So there's the standard Fannie Mae first time home buyer program, which anybody that hasn't owned a home in 3 years can potentially qualify for. This program is income driven depending on the location that they're buying. If their income falls below the median income of that town, city, then they qualify for this first time home buyer discounted rate. And oftentimes that discount in the rate can kind of, make up that gap between having excellent credit and, just okay credit, getting this discounted rate. Um, so there's
All right.
still good opportunities for rates.
the complicated and mean streets of Mortgage Town. There's a lot of a lot of important information to know. Use a professional. Um, can we get Mackenzie's contact info? Yes, that's on the screen right now. Please feel free to, I think, right? Please feel free to reach out to Mackenzie. Um, is there a max for a gift to be permitted with a loan?
Um, no, no, I don't believe so.
Can you explain that or elaborate?
I think they're just asking if, there's like a cap to gift
Uh,
funds, whether it's like $100,000 or something like, I don't believe there is.
do if someone is gifting, do they have to show documentation for source of funds? Um, and how far back from the time they are providing the gift, if so?
So we generally look at 2 months of bank statements. So when we get those bank statements, if there's any, large deposits of money, we then have to figure out where those came from, even if it's not gift funds. Usually, if somebody's getting gifted funds, they tell you up front, we know that this is going to happen at some point. And, as far as documentation from the person gifting the funds, sometimes it's just confirmation of a wire being sent.
Um, let's see. Do you have any like rules of thumb to help agents approximate the PMI cost?
Um, you just if you have like a Google, again, there are, like on our bank's website, we do have mortgage calculators and things like that. Um, it's the mortgage insurance. The closer they are to that 20% mark, the lower that amount will be. So if you're putting 3% down, you're going to be paying, the higher end of what the mortgage insurance is. If you're putting 10% down, that amount is going to go down the closer you get to 20.
Gotcha. Um, do co-borrowers need to reside in the home being purchased?
No.
All right. I think, are we through these? Do you offer bank statement loans? I'm not sure what that is.
Yeah, those are types of loans that are for people that may not qualify under like the standard, Fannie Mae kind of underwriting guidelines. We do have some options for those.
Gotcha. Let's see. I think there's a handful of other questions, but I think we're probably sort of getting to. Is there? Let me end with this one. Actually, there's two more that. Sorry, I can't help myself. Um, can you talk about? Are there any for closing costs? Is there any assistance that is available for that?
Well, once you get, I mean, there's different options for that. If you are using the down payment, you can use that to cover closing costs. You can try to negotiate for a seller credit to help offset some of those costs, would be another option.
So there may be some ways. Um, and then let me end with this one. It's sort of I think it'll help you connect into a broader thing that I think you mentioned, but it'll be worth repeating. I sold my home 5 years ago. I inherited a home in another state. Am I a first-time home buyer? So, and I think the more general question is like, how do you define a first-time home buyer?
So you're gonna be the owner of that inherited property. I'm sure it went through all of the proper steps, and now your name is gonna be on the deed of that property, which would negate you from being a first-time home buyer.
All right. Oh, and we got clarification on one of the earlier questions. So, Fed's credit score overhaul for conventional mortgages. Lenders can use lower credit score models and a holistic approach. So I think it was getting away from the stricter requirements on the credit score.
Yeah, and that is kind of similar to that topic. Um, there's different models of credit scores that are used. And the most conservative is generally when you're applying for a mortgage. So, if somebody is asking you, questions about, credit and, they say, oh, well, my credit score is this. And, how do they monitor it? Like, let's say Credit Karma, for example. Credit Karma is basically saying, yeah, your credit score is 750 if you're applying for a Best Buy card, not necessarily a mortgage. So that's something to be aware of, if you're ever having a credit discussion with a client.
Okay, gotcha. Well, thank you. There's some other questions we'd love to get to. We'll try to get to them after the call for you and write you back. This will be available to everyone who signed up as a recording. And again, thank you everyone for your time. Mackenzie, especially thank you to you. That was so informative. And hopefully we'll do it again soon. Thanks, everyone.
Have a good day.